In this video we are going to talk about dividend growth stocks. So before starting, please like this video and subscribe to this channel for future updates. Millions of Americans are in need of a regular, risk-free income as financial volatility rises and job losses as a result of the coronavirus outbreak. Dividend investing, when done correctly, is one of the most effective strategies to diversify your income. Dividends appear to account for a significant portion of stock market gains, according to data accumulated over several decades. Jeremy Siegel, for example, presents an important data point in his book The Future for Investors to emphasize the importance of dividend investment. According to Siegel, reinvesting dividends accounts for around 97% of total actual stock accumulation, while capital gains account for only 3%. Similarly, the highest dividend yield quintile accumulated to almost $460,000 from 1958 to 2002, compared to $130,000 for the S&P 500. According to Goldman Sachs' famous white paper, Why Dividend Growth Matters, the yearly return for all dividend-paying firms in a given period was 8.8%, compared to 7.1% for the S&P 500 index. Number 10. Altria Group, Inc. NYSE. Mo. Altria is one of the greatest dividend companies to purchase for growth and steady income, with a 6% dividend yield, 50 years of continuous dividend raises, and good core company development prospects. Mo stock was recently raised to buy by Jefferies, citing the company's presence in the rapidly growing smokeless products industry. The stock's price target has been raised to $58 by Jefferies. Altria Group was held by 37 hedge funds in Insider Monkey's database of 887 funds at the end of the fourth quarter, compared to 47 funds in the third quarter. With 9.2 million shares valued at $377.8 million, Renaissance Technologies is the company's largest shareholder. Number 9. Lockheed Martin Corporation, NYSE, LMT. Lockheed Martin is one of the top 10 dividend stocks to invest in for long-term income and growth. In the last 18 years, the defense behemoth has steadily boosted its dividend. Every month, the corporation maintains its supremacy in the aerospace and military equipment industry, gaining significant contracts. It recently received a $128.39 million Navy contract modification, a $610.47 million Missile Defense Agency deal, and a $284.39 million Army contract modification, among other contracts. The business is now branching out into space. It also intends to buy Aerojet Rocketdyne, a space company. The Pentagon recently awarded the corporation a $4.9 billion contract for geosynchronous Earth-orbiting space vehicles, which are part of the next-generation overhead persistent infrared space-based missile warning systems. AeroStreet Capital owned 1.5 million shares of LMT worth $544.7 million at the end of the fourth quarter of 2020. LMT makes up 0.76% of AeroStreet's overall holdings. Riverpark Advisors, LLC mentioned a few stocks in one of their investor letters, and Lockheed Martin Corp. NYSE, LMT, is one of them. Here's what the fund had to say. Number 8. Cisco Systems, Inc. For the past 10 years, Cisco has continuously boosted its dividend. The company provides a good balance of high growth, long-term returns, and consistent income. It operates in the network equipment, software, and cloud computing markets, which are all seeing rapid growth. In the last year, the stock has increased by 28%. Goldman Sachs recently upgraded the stock from hold to buy, citing a rebound in network spending as a result of the anticipated reopening of offices throughout the world. CSCO is the 8th greatest dividend stock on our list. Generation Investment Management holds 23.3 million shares of Cisco Systems and has a $1.04 billion investment in the firm as of the end of the fourth quarter of 2020. According to our database, 60 hedge funds owned CSCO at the end of the fourth quarter, compared to 59 funds at the end of the third quarter. Heartland Advisors featured a few stocks in their Q3 2020 investor letter, and Cisco Systems Inc. Nasdaq. CSCO is one of them. Here's what Heartland Advisors had to say about it. Number 7. Johnson & Johnson. Johnson & Johnson has a 58-year dividend increase streak and a robust pipeline of growth catalysts. In a Phase 2A clinical trial for its COVID-19 vaccine candidate, the company just began vaccinating adolescents. J&J has numerous potential growth accelerators in addition to the vaccine business. Band-Aid, Tylenol, Listerine, and Neutrogena are among the company's well-known brands. The company's medical device division, which accounts for around 30% of total revenues, is also expanding. The pharmaceutical division of the corporation provides promising treatments for diseases involving immunology, cancer, neuroscience, infectious diseases, pulmonary hypertension, and the heart. At the end of the fourth quarter, 81 hedge funds tracked by InsiderMonkey were positive on J&J, down from 82 funds a quarter earlier. Number 6. The Procter & Gamble Company. In the previous 64 years, consumer goods behemoth Procter & Gamble has continuously increased its dividend. In addition, the company has a number of long-term growth drivers. The stock was just designated one of Morgan Stanley's top recommendations in the personal care industry. The firm favors P&G because of the company's revenue and earnings growth, near-term clarity, and reinvestments, according to the firm. PG is ranked number 6 on our list of the best dividend companies to purchase for long-term growth and income. At the end of the fourth quarter, Andy Brown's Cedar Rock Capital was one of 83 hedge funds tracked by InsiderMonkey that had interests in PG. Over 9.9 million shares of the corporation are owned by the fund. Number 5. Schwab U.S. Dividend Equity ETF. The Schwab U.S. Dividend Equity ETF is one of the top dividend ETFs for gaining exposure to the industry's high-yielding and strong dividend payers. Exxon, Texas Instruments, Altria Group Inc., Coca-Cola Company, and IBM are among the ETF's major holdings. In the fourth quarter of 2020, there were 5 hedge funds with a stake in SCHD. Number 4. Main Street Capital Corporation. Main Street Capital is ranked 4th among the top 10 dividend companies to purchase for long-term growth and income. The private equity business invests in lower middle market companies. The company is a safe bet for income investors, with a dividend yield of over 6% and close to 5 years of uninterrupted dividend increases. The company's distributable net investment income easily above the consensus expectation in the fourth quarter. The total investment income for the quarter was $62.5 million, compared to an estimate of $55 million. The smart money is taking notice of the company, with 7 hedge funds tracked by InsiderMonkey reporting ownership holdings in the company at the end of the fourth quarter, up from 4 funds a quarter earlier. Number 3. The Toronto Dominion Bank. Toronto Dominion is the third best dividend company to purchase for continuous growth and income, with a dividend yield of 3.76%. One of Toronto's Big 5 banks is Toronto Dominion. For the past 10 years, the bank has boosted its dividend. The bank's dividend growth rate over the last 5 years has been 9.2%. InsiderMonkey's database showed 22 hedge funds have interests in Toronto Dominion Bank at the end of the fourth quarter, up from 15 funds in the third quarter. Renaissance Technologies, which owns 524,680 shares in TD, is the company's largest shareholder. Number 2. Enbridge Inc. Enbridge, a natural gas corporation, has raised its dividend every year for the past 26 years. Enbridge's dividend yield now stands at roughly 7%. The Canadian firm is making significant investments to adapt to the global energy change. In regional markets, one of Enbridge's main gas transmissions reaches 170 million people, while its gas distribution company serves around 14 million people in Canada. Marshall Wace LLP presently owns $44.5 million worth of Enbridge stock, valued at 1.4 million shares. ENB makes up 0.24% of Marshall Wace's overall holdings. Number 1. Waste Management, Inc. Waste Management is one of the top 10 dividend stocks to invest in for long-term income and growth. The corporation has raised its dividend for 18 years in a row. Waste Management upped their quarterly dividend by 6% in February. In the last year, the stock has increased by 43%. The company reported non-GAAP EPS of $1.13 in the fourth quarter, 4 cents higher than street expectations. Revenue increased by 5.7% to $4.07 billion during the quarter. The number of WM's long hedge fund positions fell at the end of the fourth quarter of 2020, according to our database. In the third quarter, 38 hedge funds held a position in Waste Management Inc., whereas 37 hedge funds held a holding in the fourth quarter. Bill and Melinda Gates Foundation Trust, with 18.6 million shares valued at $2.2 billion, is the company's largest shareholder. What do you think about our video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.